Welcome to The Explainer. Listen, if you're building a business in India right now, you already know the drill. Finding capital, well, it can feel like trying to navigate an absolute maze blindfolded. Today, we're completely demystifying Indian government startup loans. My promise to you for the next few minutes is super simple. We're going to cut straight through all that bureaucratic alphabet soup and give you the actual step-by-step roadmap to secure your funding. Let's get into it.
Okay, let's just address the elephant in the room right off the bat. You've got this brilliant idea, right? A totally scalable model, the drive to make it happen, but you need cash. And like most founders, you have absolutely zero collateral to offer a bank. Literally, it's the single most common founder struggle out there. But what if I told you the government actually has direct, scalable solutions built for this exact specific problem? Because they do.
So here's our roadmap for today. First, we'll cover the foundation, DPIIT and UDIM. Then, seed funding with SISF. Third, we'll look at microloans like Mudra and Stand-Up. After that, we'll tackle collateral-free options with CGTMSE. And finally, we'll wrap up with your actual funding action plan.
All right, let's dive right into Section 1, the foundation, DPIIT and UDIM. Think of these registrations as your exclusive VIP passes. Seriously, they are the absolute non-negotiable prerequisite to unlocking millions of rupees in government funding and tax holidays. But before you start filling out forms, you need to know exactly where you stand. To get the pass, you have to fit the official DPIIT startup definition. It's pretty specific. Basically, your entity, which needs to be a private limited company, an LLP, or a registered partnership, has to be under 10 years old. Plus, your annual turnover must be under 100 crore rupees for any financial year. Oh, and your core business needs to be genuinely geared towards scalable innovation, wealth creation, or high employment generation. You know, building something real.
Now, if you check those boxes, you'll be glad to hear the actual process is incredibly straightforward. It really shows how much they're pushing for ease of doing business. You just hop on the Startup India portal, provide your incorporation details, upload the docs, and self-certify. That's it. It's completely free and there's absolutely zero physical verification required. The whole shebang is totally online and you usually get your DPIIT number in just 2 to 3 working days. Crazy fast, right?
Getting this foundational step right is absolutely crucial. Think of these certificates as your master keys. And, hey, getting some expert advisory can really speed things up, especially for securing your free UDM MSME registration alongside that DPIIT recognition. Because without those 2 keys, all the doors to the heavy-hitting loan schemes we're about to cover, yeah, they're going to stay firmly locked.
Moving right along to Section 2, seed funding with SISF. Okay, so your foundation is rock solid. Now we look at the very first major capital injection available to early-stage innovators. Just look at that number, 945 crore rupees. That is the massive corpus allocated to the Startup India Seed Fund scheme over 4 years. I mean, bringing up the sheer scale is important because it proves the government is highly motivated to fund promising startups. This isn't just some theoretical fund on paper, this is active capital, sitting there waiting to be deployed through DPIIT-recognized incubators.
So the really cool part is how this scheme scales exactly to where you're at. If you're still validating an idea, building a prototype, or maybe filing some IP, you can access up to 20 lakh rupees as a pure grant. Meaning, and this is the best part, you don't have to pay it back. But let's say you're ready for commercialization, you're pushing for market entry. In that case, you can secure up to 50 lakh rupees through debt-linked instruments or convertible debentures. It literally meets you right where you are in your journey.
All right, let's step up the ladder to Section 3. Microloans, Mudra, and Stand-Up India. Look, we know not every business is a tech unicorn, right? Sometimes you just need vital working capital to buy some machinery or expand a storefront. That's where the Pradhan Mantri Mudra Yojana comes in. It neatly organizes funding into 3 specific tiers based on your exact growth stage. This is a total game changer because it completely eliminates the need to go to high-interest, informal money lenders. So check this out. If you're just starting up, the Shishu tier offers up to 50,000 rupees. If you're growing and need some more equipment or inventory, Kishore gives you up to 5 lakh, and for expanding enterprises, Tarun offers up to 20 lakh rupees. And the absolute best part, Shishu and Kishore loans require absolutely zero collateral.
Now, running parallel to Mudra is the Stand-Up India scheme, and this one is incredibly impactful. It's designed specifically to champion and empower certain demographics. If you are a founder from an SC or ST background, or you're a woman entrepreneur, and you're starting your very first or greenfield enterprise in manufacturing, services, or trading, this scheme provides some serious targeted backing. We are talking about composite loans ranging from 10 lakh all the way up to a massive 1 crore rupees.
Next up is Section 4,
Collateral-free, CGTMSE. All right, now we're getting to the heavy hitters. This is the ultimate transformative solution for founders who have a killer business model, but just lack the hard assets banks usually ask for. As of 2023, the collateral-free limit under CGTMSE has been bumped up to a staggering 5 crore rupees. Essentially, the government steps in and acts as your guarantor, covering up to 85% of your loan amount. No joke. This completely shatters that traditional collateral barrier and opens up massive term loan and working capital access for eligible MSMEs and startups. Now, what's really interesting about this slide is this incredible insider tip from the MSME consultants. They advise, always ask your bank to cover your loan under CGTMSE. Why? Well, surprisingly, a lot of banks just forget to mention this facility to borrowers. You absolutely have to advocate for yourself here. When you walk into that branch, you need to confidently request, actually, scratch that. You need to demand that your loan application be processed under the CGTMSE framework.
Which brings us to our final section. Section 5, your funding action plan. Okay, let's shift away from the theory and get into a direct, actionable playbook for your first 4 months. Month 1, get your entity incorporated correctly, ideally a private limited or LLP, and open a dedicated business bank account. Month 2, secure those vital DPIIT and UDM registrations we talked about. Remember, those are your VIP passes. Month 3, this is where you prepare your detailed project report, or DPR. And finally, month 4, you submit those targeted applications. Listen to me, skipping those early foundation phases will inevitably lead to rejection later on. So follow this sequence religiously.
Actually, I want to pause on month 3 for just a second. Creating a solid, bankable, detailed project report, complete with your financial projections and a clear revenue model, is literally the single most important document you'll create for these schemes. And hey, if you aren't a financial wizard, that is totally fine. Utilizing expert facilitators and advisors like the folks at the MSME consultants highlighted here can drastically streamline this whole process. It can honestly make you loan ready in a fraction of the time. So, here's the bottom line. The capital is out there. The Indian government has essentially built this incredible ladder of funding designed specifically to help you succeed, all the way from your very first prototype up to a massive commercial expansion. Your VIP pass is literally just waiting to be claimed. So I'll leave you with this. Take that foundational step today and ask yourself, which scheme is going to fund your future? Thanks so much for joining me on this explainer, and happy building out there.